Every cycle in crypto, there are projects that explode in hype and then vanish just as fast. But then there are the survivors, blockchains that stick around through multiple bear markets, building quietly in the background while others fade away. VeChain belongs to that second category. It's not a flashy project chasing short-term attention. It's one with a clear focus on enterprise solutions and solving real-world problems. If you're holding 19,711 VET tokens right now, you're probably asking yourself how much those could be worth by 2026. So today, let's walk through VeChain's fundamentals, the latest market picture, and some realistic future scenarios to see where your bag might land. Before we continue, quick reminder. If you want a reliable exchange for trading, I use WEEX. It's got deep liquidity, very low fees, and a huge selection of coins. Right now, you can grab up to $30,000 in sign-up bonuses and trade with up to 400x leverage. No KYC needed. Link is in the description if you want to check it out. Now, let's talk numbers. At the time of recording, VeChain is priced at about 2.5 cents. With a circulating supply of roughly 86 billion tokens, that gives it a market cap in the $2 billion range. Your 19,711 VET tokens are currently worth a little under $500. That's the starting point. The real question is how much bigger this number could get if VeChain's adoption grows and the broader market turns bullish by 2026. What sets VeChain apart is its laser focus on enterprise adoption. While most blockchains fight for attention in the DeFi or meme coin space, VeChain has always been about integrating blockchain into existing industries. Supply chain tracking, sustainability reporting, carbon footprint monitoring, and product authentication. These are areas where VeChain has proven its usefulness. Walmart China has used VeChain to trace food products, ensuring safety and transparency for consumers. BMW has tested VeChain for verifying auto parts authenticity. PwC has partnered with VeChain to develop auditing tools, and luxury brands have experimented with VeChain to fight counterfeiting. These are not speculative promises. They're live examples of VeChain's technology being applied in the real world. The VeChain Thor blockchain also offers unique features. Its proof of authority consensus system makes transactions fast, efficient, and predictable, which is critical for enterprise users who don't want to deal with unpredictable fees. The dual token model separates VET, which represents value and investment, from VTHO, which is used to pay for transactions. This design helps keep costs stable and prevents gas fee spikes that plague other blockchains. For businesses looking at blockchain integration, that stability makes VeChain one of the most practical options. So where could this take the price by 2026? Let's consider some scenarios based on market cap growth. If VeChain simply doubles its current market cap to around 4 billion, the price per token would be close to 5 cents. That would put your 19,711 tokens at just under $1,000. Modest, but a clear step up from where you are today. If VeChain climbs into the 10 billion market cap range, that pushes the price per token to roughly 12 cents. At that level, your holdings would be worth about $2,365. That's already a multiple of today's value. If VeChain manages to hit 20 billion in market cap, each token would trade closer to 23 cents. At that price, your 19,711 VET would be worth over $4,500. And if VeChain catches major adoption momentum and climbs to 50 billion in market cap, the token price could be in the 58-cent range. That would make your holdings worth around $11,431. Finally, in the most ambitious case, if VeChain ever pushed toward $1 per token, which would mean an $86 billion market cap, your bag of 19,711 VET would be worth just under $20,000. That's a 40 times increase compared to today's price. And while it would take enormous adoption to reach that level, it's not impossible in a parabolic bull market. But here's what matters beyond the numbers. VeChain has been aligning itself with broader global trends. Sustainability is becoming one of the biggest priorities for corporations and governments. Companies are under pressure to track carbon emissions, verify supply chains, and ensure transparency for regulators and consumers. VeChain already has tools designed for exactly this use case, and that gives it a head start. If sustainability regulations tighten further in 2026, VeChain could see a wave of adoption from enterprises that need blockchain-backed solutions to stay compliant. VeChain has also been making steady technical upgrades. In 2025, the team continued rolling out improvements to smart contracts and dApp development. While VeChain isn't competing head-to-head with Ethereum or Solana in terms of DeFi, it is carving out a niche for enterprise-level applications. And when enterprises choose a technology, they don't switch it every few months. They stick with it for years. That kind of loyalty and integration could be what what helps VeChain grow steadily, while other projects rise and fall with hype. Another important aspect is tokenomics. The burning of VTTO as part of transaction fees means that as network usage increases, more tokens are removed from circulation. Over time, this creates a deflationary effect that can put upward pressure on VET's value. If adoption grows meaningfully, that effect could become more noticeable by 2026. Of course, there are risks. VeChain's proof of authority model is often criticized for being too centralized. Its heavy focus on enterprise adoption also means that growth can be slow, since corporations move cautiously. Competition is another factor, with other blockchains and even private solutions trying to capture the same enterprise clients. And like every other crypto project, VeChain's price will still be tied to overall market sentiment. If the broader market struggles, VeChain will too, no matter how strong its fundamentals are. Still, the resilience of VeChain shouldn't be underestimated. It has survived since 2015, outlasting countless projects that came and went. It has one of the most stable, real-world adoption stories in crypto, and it has a dedicated community that continues to support the project even when the spotlight moves elsewhere. So, to bring it back to your bag, the math is clear. Your 19,711 VET are worth about $500 today. At 5 cents, they'd be worth nearly 1,000. At 12 cents, over 2,300. At 23 cents, more than 4,500. At 58 cents, over 11,000. And if VeChain ever hits $1, you'd be looking at almost $20,000. This isn't financial advice, and crypto is one of the most volatile markets in the world. Prices can swing up or down quickly depending on news, regulations, or macroeconomic conditions. Always do your own research and never invest more than you can afford to lose. But the numbers tell a story. Even modest gains in VeChain could significantly increase the value of your 19,711 tokens by 2026. And if adoption accelerates, the upside could be much larger than most people expect. The only question is whether VeChain can keep delivering on its enterprise vision, continue winning partnerships, and expand its real-world use cases. If it does, then by 2026, your VET bag could be worth far more than it is today.